VOA Special English Economist Report. Facebook is the world's biggest social network and the subject of the movie The Social Network. The real Mark Zuckerberg and his friends at Harvard University launched the site in 2004. Facebook says it reached 500 million users last July. Now, the American bank Goldman Sachs and the Russian company Digital Sky Technologies have funded Facebook. They have invested a total of $500 million in the company. The deal values Facebook at $50 billion, more than many publicly traded internet companies. Goldman Sachs is expected to raise $1.5 billion more by selling shares of ownership in Facebook to rich investors. The plan does not include a public stock offering, at least not right now. For now, Facebook would remain a private company, meaning a company that does not sell shares to the public. The plan has brought new attention to the largely secretive world of private financing and the rules for private companies in the United States. The idea is that investors in public companies have protections that investors in private companies do not. The Securities and Exchange Commission says a private company must report financial information if it has more than 500 shareholders. A new business, a startup company, is usually considered too risky for average investors, but a promising startup may find a small number of private investors, often known as angels. These investors are willing to lose everything for a chance at big returns. Rika Tata has been involved in raising money for startups. He is now chairman of his own investment company, Covestor, with offices in New York and London. Mr. Tata compares the difference between public and private companies to the difference between marriage and dating. When people are dating, he says, there are understandings but few rules. In marriage, the rules are more clear and well defined. In his opinion, the only real benefit for a private company is lower administrative and record-keeping costs. Yet, he tells us, Covestor remains a private company after a few years because it is still too risky for most investors. For VOA Special English. can comment on our programs and find transcripts and MP3s at voaspecialenglish.com. We are on Facebook and Twitter at VOA Learning English. This is the VOA Special English Economics Report. Facebook is the world's biggest social network. It has over 900 million users worldwide, and it reported $3.7 billion in sales for last year. The company has been privately held since 2004. That was Mark Zuckerberg and several classmates at Harvard University started Facebook as a business. But on May 18th, Facebook becomes a publicly traded company. That means its shares will be listed on the Nasdaq stock market and sold to the public. Interest in the stock kept building after Facebook announced details of its initial public offering, or IPO, earlier this year. The IPO will make billionaires of the company's founders, including Mr. Zuckerberg. Eduardo Severin, a Brazilian-born co-founder, has been strongly criticized for recently giving up his United States citizenship. By doing so, he will avoid a 15% tax on the value of his shares. He now lives in Singapore. Shortly before the trading started, Facebook told the Securities and Exchange Commission it wanted to increase the number of shares being offered to over 420 million. The company had earlier said it planned to offer 337 million. The starting price was set at $38, also an increase. Some financial experts say Facebook could raise $16 billion, making it one of the biggest IPOs ever. Most of Facebook's revenue comes from online advertising. But the company also says it expects to earn money from fee charge on the sales of virtual goods. These are digital products used in social games, not physical goods. Facebook says it sees important income coming from this new market, which could reach $14 billion by 2016. Not everyone is pleased. General Motors ended its advertising agreement with Facebook just before the stock began trading. The car maker said it did not see results from the millions of dollars it spent on advertising with Facebook. And Facebook has been criticized for some recent business decisions. It offered $1 billion to buy Instagram, an application for sharing photographs. The deal requires government approval and has yet to be finalized. So, is Facebook worth the price of stock? That will be for investors to decide.